Good afternoon, this is Ryan Mallory for SharePlanner.com. Today I want to go over another trading lesson just like I did yesterday, and this one is on market timing and not piling on positions in the direction of a trend that's starting to mature. I had to learn this the hard way, particularly on Tuesday when the market went down about at 1.5%. And what I basically did is I looked back at my trading journal from this past year. There's been a myriad of winning trades and losing trades, and what I wanted to do is look at all the losing trades in particular and try to find a common thread between them. Was there something that I was doing wrong from a trading standpoint that was causing me to lose more money than I needed to lose on a trade by trade basis? While I'm not at all displeased with my performance this year, I think that I could do much better. And so one of the common threads is that yes, I wasn't extracting profits quick enough or consistently enough. I was letting some trades turn into losers, even though I vehemently preach against letting that happen. And second of all, I noticed that I was getting into rallies early, but then I'd make a lot of profit off of getting into these trends early on in the market. But then, as the trend was maturing, I would get in even more and cause myself to lose a percentage of the profits that I had earned from back in the early stages of that trend. So let's look at S&P 500 here, for instance. When you look at it here, and this is about from the past year here, I was able to short the market off of the sell-off back in January. I shorted the market was pretty good, but when I made a lot of profit off of this sell-off right here, instead of waiting for a bounce or a pullback, I was still adding positions right here. Now, fortunately, there was enough profit that I was making at this stage of the sell-off that when I was adding positions here, I wasn't losing everything that I had just earned. But I've seen that trend present itself many times over, that tendency present itself. I got in right here when the market, well, let me go back. I started getting long around this point right here in the market, and instead of scaling back my long positions right around here, I started adding more long positions. And I was taking profits in the positions that I got right here, but when we got up here, I was replacing those positions with new positions up here. And what ended up happening was I would lose another percentage of the profits that I had earned from early on in the trend. And the same thing goes on here. I got in on this point, and after this flash crash, I did not do a very good job of protecting those gains, and I lost a percentage of the profits that I made up here. So it repeats itself many times. I mean, I can draw it here. I can draw another one here. I mean, I got in here, added more positions here, and you know what? It makes trading very difficult when you're doing that to yourself. So the most recent time that I did it was here. Got in here. Actually, I'm sorry. That's not totally forthcoming. Let me see if I can move this circle here. Okay. I got in at about right here on this latest market run. Got in, made a decent run off of it, but on Monday, when I was about 50% long at one point, which is a pretty good place to be in at a mature stage in the rally, I had pretty tight stop losses. I started adding a few more positions to the portfolio instead of waiting for it to pull back some. I got in right here on the high of this S&P so far, and I added two new positions, ACI and Ann Taylor. Now let's look at Ann Taylor first here, and you'll see Ann Taylor took a beating as soon as I got in. I got in at the close on Monday evening, and Tuesday, I think one of its competing brands, Cold Creek, I think that's the name of the company, they didn't have that great of an earnings report, and as a result, Ann Taylor took a beating. I got stopped out probably within the first 5 minutes of trading. That is a little bit frustrating. I'm not going to lie. And as a result, I'm out a quick 0.5% of my portfolio off of one trade because I did not manage risk like I should have on that particular position. So while I adhere to stop losses religiously, and while I try to not let my winners turn into losers, one thing that I was doing that was causing me to take on additional risk that wasn't necessary was dogpiling on new positions in a mature trend. And that's one thing going forward that I'm not going to allow myself to do. The other example is ACI, and you can see here that nice upward trend going on here, and Tuesday hits and wallop. I mean, just took me right out of the position. What I should have been doing, and I know better than that, I really do, and one of the things that I should have been doing all along was not allowing myself to add new positions when the market is clearly overbought. The T2108, the NYSE reversal indicator, the McKellen oscillator, the stochastics, all of them are showing that the market's overbought, and I'm still adding positions. Instead, I needed to wait for a pullback. And Tuesday, frankly, was a great opportunity to add new positions to the portfolio, and that is really what I should have been doing instead of trying to manage the positions that I had from losing too much money for me. So Tuesday was a frustrating day. It should have been an opportunity day for me, but it wasn't because I wasn't managing risk appropriately, and I'm willing to admit that. I'm not a perfect trader, and I don't think anybody is, but the difference is a lot of people aren't willing to admit that. I don't own the holy grail to the stock market, and don't expect that I ever will. However, I think that, like anybody, there's always room for improvement in one's trading methodologies, and this particular area here of being careful of not adding new positions in a mature trend without a pullback is one area that I can improve in. The other one is making sure that I'm not that I'm getting a bigger chunk of the optimal profit in a particular trade, and that's what I highlighted yesterday. So going forward, I'm going to just recap this real quick, pull up the S&P. I'm doing a great job of getting in at the beginning stages of a new trend. Here when the market sold off, here when it started recovering, actually right about here when it started recovering, up here when the market sold off again. I'm doing a great job, and in the latest, of getting in right around here, I'm doing a great job of identifying the new trends. What I probably could do a lot better job of is noticing when the trends are starting to mature quite a bit, that the profit opportunity isn't there like it was early on, and not dogpiling on new positions when I'm doing nothing but just dramatically increasing my risk to the downside. That's going to be another theme that I'm going to be preaching going forward, not only just for you guys, but also for myself, because I've got to keep preaching this stuff to myself so that I'm not making careless decisions in this market. All right, that's about it for today. I was hoping to do a live broadcast, and I still may get around to that, and if nothing else, just to do it for testing purposes. So, all right, well, you guys have a fantastic afternoon. Hopefully this market can recover some off of its lows. It's doing a good job of it so far, but I won't trust anything until 4 p.m. strikes. So long.